What's driving markets? Welcome to Market Take. Each week, we'll bring you our insights on the latest market and economic trends that are impacting investments. I'm your host, Vivek Paul, Head of Portfolio Research at the BlackRock Investment Institute. This week, we're talking portfolio allocation and addressing a key question that's been in the headlines recently. Are US assets losing their appeal? Moody's US debt downgrade has reignited concerns, but we still see US assets as central to global portfolios. US equities have surged 22% from their April lows, according to LSEG. Tech stocks have led the gains, affirming our preference for the AI theme. When equities slid, so did the US dollar and treasuries, triggering speculation that investors are losing faith in US assets. It's not that simple. The dollar is still historically strong, and we have long argued that investors would demand more compensation for holding long-term US bonds because of persistently large fiscal deficits, sticky inflation, and bond volatility. Plus, long-term treasuries still carry a relatively low risk premium versus the past. The tariff-driven inflation and quarterly contractions we expect this year are akin to past periods when the dollar fell and term premium rose, and investors didn't question US assets more broadly then. We stay overweight US stocks on a 6 to 12-month horizon, thanks to US corporate strength and megaforces like AI that are driving an economic transformation on par with the Industrial Revolution. The end state of this transformation is uncertain, which makes long-term asset allocation challenging. That's why we no longer anchor to a single scenario. Static portfolios aren't suited to a post-pandemic world. We are publishing multiple sets of long-run capital market assumptions for the first time to reflect a wider range of potential outcomes and be more dynamic in building portfolios. We build our strategic allocations around a starting point scenario, but we now formally track alternative paths so we're ready to pivot portfolios should those scenarios unfold. We believe the starting point has to reflect today's reality of global capital markets, with US assets still core to portfolios. Why? Hard economic rules limit how quickly the current structure can change. Supply chains can't be rewired overnight, as the recent 90-day pause on US-China tariffs shows, and the US still depends on stable foreign funding to sustain its debt. Moody's downgrade highlights the risk that persistent budget deficits and higher interest costs could dent confidence among foreign bondholders, pushing yields even higher. That's why our starting point also includes our expectation of rising term premium for US Treasuries and persistent inflation. We go overweight inflation-linked bonds and neutral global investment-grade credit given wider spreads. We lean into private markets and we like infrastructure equity, such as stakes in airports and data centers, as it benefits from megaforces. Private markets are complex and are not suitable for all investors. We keep this scenario under review as we learn more. Here's our market take. Economic transformation makes building long-term portfolios more challenging. We now use a starting point scenario in our strategic views and formally track others. US assets are still core to portfolios in our view. For details, read our weekly market commentary. Go to www.blackrock.com/weekly-commentary. Thank you for tuning in. If you've enjoyed this episode, subscribe to Market Take wherever you get your podcasts.
This material is intended for informational purposes only and does not constitute investment advice, a recommendation, or an offer or solicitation to purchase or sell any securities, funds, or strategies to any person in any jurisdiction in which an offer, solicitation, purchase, or sale would be unlawful under the securities laws of such jurisdiction. The opinions expressed are as of the date of publication and are subject to change without notice. Reliance upon information in this material is at the sole discretion of the listener. Investing involves risks. BlackRock does and may seek to do business with companies covered in this podcast. As a result, listeners should be aware that the firm may have a conflict of interest that could affect the objectivity of this podcast. For more information, visit blackrock.com